The strong dollar is really hurting the rest of the world. It's helping America considerably because if we didn't have a strong dollar, prices would be going up a lot more.
Hmm.
Interest rates would have gone up a lot more. So the strength of the dollar is helping Americans, but it's hurting everybody else. I mean, it's our gain and it's their loss because we're exporting a lot of our inflation to the rest of the world. Now, if the dollar was a normal currency based on the economic fundamentals, the dollar would be tanking, but it's not because it's still got the mystique of a safe haven. It's the reserve currency. And so the dollar keeps going up. And so Americans take those appreciated dollars and they go around the world and they buy stuff. They bid up prices. But we're not producing stuff. We have record trade deficits. So we're sucking goods out of the global economy and we're not paying for them by putting goods into the global economy. We go to the world and we take all their stuff and we just give them paper. And now they don't have that stuff anymore. So the supply of stuff goes down outside the United States and it goes up inside the United States. So we get more stuff, so we have lower prices. The rest of the world has less stuff. They have higher prices. And so this is putting more downward pressure on their economies, on their bond markets. But at some point, this is going to break. Because at some point, the rising interest rates, so look, bond yields just hit new 14-year highs again today. The yields are now like 4.25 on the 10-year Treasury or 30-year Treasury. Mortgage rates are now probably 7.25. They'll be 8% by the end of the year, probably 10% by early next year. The Fed funds rate will move up to 5%, then 6%. There's no way that the nation can pay this interest. It's just too big a burden on the economy. There's too much debt. There's no way to service it. The national debt, 31 trillion. It's financed with short-term paper. A lot of that paper is rolling over in the next year, and it's going to go from 25 basis points to 450, 500 basis points. I mean, you're talking about a massive increase in the debt. By next year, the government's going to be spending well over $1 trillion a year just on interest on the national debt. We already have a $2 trillion deficit. I mean, these numbers are too big, but corporations can't finance the debt. State and local governments have got tons of debt. Individuals have record amounts of debt, record low savings, record high debt, credit card debt, auto loans, student loans, mortgage debt. So at some point, the Fed is going to turn its attention from inflation to this economic implosion, this financial crisis. And when that happens, the dollar is going to drop like a stone.
Hmm.
And then inflation is going to take off. And then I think this whole process is going to escalate, because as the dollar really starts to fall and inflation really starts to rise, I mean, that's going to put up a lot of upward pressure on interest rates. And then the Fed's going to have to print even more money to buy even more bonds to stop the rates from rising.
Hmm.
And as they do that, they just create more inflation and they create even more selling in the bonds they're creating inflation to buy. So you get into this vicious circle.
Yep.
So we've got a real sovereign debt and currency crisis coming. And this big rally in the dollar right now, this is just a head fake. I mean, this fact that people are buying the dollar is just allowing our problems to get worse, because we just go deeper into debt, we borrow more money, and import more products. Yeah, no, there is no way out that isn't going to be very painful. I mean, there is a proper way out, right? The government can do the right thing. I mean, they've never done the right thing before, so it would be unprecedented.
Yeah.
But the Fed could just let interest rates go up wherever they have to. Under Paul Volcker, we got up to 20%. We'd probably get as high, if not higher this time, if the Fed really just backed away.
Hmm.
But there would be massive bankruptcies, foreclosures in the United States. A lot of the debt would just default and go away because it'd be unpayable.
Hmm.
A lot of companies would go bankrupt. I mean, especially the companies that don't have any earnings and have been kept afloat by cheap money and the ability to sell equity. So a lot of companies would disappear. A lot of jobs would go away. The government would be forced to dramatically reduce spending including on things like Social Security, Medicare, Obamacare, and not to future recipients, but right now, current recipients. The government would have to say, okay, we used to send you $1,000 a month for Social Security. We're only going to send you $500 a month. Or something. They have to reduce spending dramatically. The money's just not there. And they probably have to default on the Treasury debt. Maybe not a complete default where we say you get nothing, but let's say they say, okay, everyone's going to get a 50% haircut. So if you have a $100,000 Treasury, you got a $50,000 Treasury. Or what they can do is say, look, if you bought a 1-year Treasury bill, we're still going to pay you back, but now it's a 30-year Treasury bond. So you're going to get paid in 30 years, not in 1 month, 1 year. And by the way, that 3% or 2% coupon, that's what we're going to pay you for the next 30 years. You're not, so we got to find a way to restructure the debt so that it's actually payable. So a lot of things have to happen. But if we do all this and the savings rate goes up and the interest rates go up and this whole crazy bubble economy collapses, then we can have savings again. We can have capital investment. We can have productive employment. We can start making things, building stuff, have trade surpluses instead of deficits. We can end up with a successful free market economy with sound money, but we have to abandon everything we've been doing and admit that it's been a mistake, everything we've been doing for the decades. But their government really has no history of admitting to a mistake. All they do is double down on their mistakes. If something doesn't work, well, just do it bigger. So we're just going to just keep on inflating until the dollar collapses and we have massive inflation, and then we'll have price controls and shortages and black markets and riots and public unrest, and then who knows what's going to follow that. I don't know. Bitcoin was another thing that kind of was born out of the 2008 financial crisis, and ironically, it was part of the bubble that the central banks created in the aftermath of that crisis. Bitcoin rose, to spectacular heights. In 2021, it almost hit $70,000, for nothing, for virtual nothing. But there were people that paid almost $70,000 for one token, which is it's what you're really buying. Of course, is not a Bitcoin. You're buying 100 billion Satoshis or whatever they are. So people were, buying these bundles of Satoshis and paying, a very high price. But I think the whole thing was, a modern day blockchain letter, kind of morphed kind of a combination Ponzi pyramid chain letter kind of thing with elements of each one. But there was a sexy story behind Bitcoin that initially gained traction in the libertarian world, the free market, anarcho-capitalists, tech savvy, younger people. And that's when I learned about it. I learned about the thing in 2009 or 10 or early on. And obviously I had an opportunity to make billions of dollars, but I knew from the beginning that it would not work. I knew that it wasn't real money, that it had no substance, and that it wasn't digital gold. I knew that, people could get suckered into it. I recognized there was that potential, but I never really imagined back then, that it would achieve anywhere near the success that it did for the early adopters who got in and were able to con people into paying such large sums of money.